Deal surgeons, elite masterminds, what's going on? This is Diamond Life. Appreciate you guys listening. Appreciate you guys watching. This is a win review for Bitcoin. So what I want you guys to do is just make sure you're subscribed. I actually checked the stats, and half of the people that watch is not even subscribed. So if you could just hit the subscribe button and a like button, appreciate it. So let's go ahead and break down Bitcoin, okay? And this is what I like to do right here. I like to go here and turn this off right here. So you may want to do this just so you can see the pairs. So let's go ahead and break down Bitcoin. Okay, so let me play the video of me actually winning on Bitcoin. Okay, I'm gonna do it sped up. It's gonna be a sped up video, but I just want to show the win that I had and then explain it. Okay, so here's the sped up video. Okay, so the the blue buttons and the red buttons are the entries, and the blue buttons are the entries, and the red arrows is the stop loss. Okay, I'm sorry, the where I actually got out at, where I actually took a loss. Okay, so this is sped up. I just want to show the video. See if I can. All right, let me explain this. So yeah, so this is where I entered right here. I'll go to the chart itself, but it's 52,000 right there, the profit. So I just want to show you that, but let me go to the chart itself. Okay, turn on. Hold on. Okay, so let me enlarge the screen and let me explain what happened. Okay, so now this I was shadow trading this. So I want to talk about the whole shadow trade, sibling trade. I really like to call it shadow trading versus the sibling trade. So I changed the name. But basically, let me show you how I feel for the BS. Now let me show you now. Ethereum, Bitcoin, they all move similar. Okay, this is Cosmos, which is Atom, and then ADA, which is Cardano. Okay, if you look at the shadows on here, that's why I call it shadow trading. You heard it here first. Other people gonna be trying to copy the shit in the future, but you know it's fine. Here are the shadows right here. So basically, these shadows mean that this is the exact date and time that the other pairs that move similar already hit certain standard deviation lines on this chart here. These are the first 5 trading days Fibonacci, first 5 trading days standard deviation, which is the white line. Well, actually, the standard deviation is up here. This is one standard deviation, but I actually broke it up into micro standard deviations because I'm trying to catch as much as I can. Okay, especially in the first 10 trading days or so. So I noticed that Cardano and Atom or Cosmos already hit certain areas. Okay, even Ethereum had already shot up. Now Ethereum and Bitcoin moves very similar. Okay, let me take these fibs off because I was doing some experimentation with Fibonacci. You should always be experimenting with this stuff that you learn. I've been experimenting with Fibonacci for a while as far as using the wicks and using the bodies. But anyway, so let me tell you how I fell for the BS. And I'm trying to show you don't fall for the BS. Now, I'm the one that created the shadow trading shit, right? But listen to this. I still fell for it. I still, for some reason, I thought Bitcoin was going down. So I bought right here, okay? I bought right here. And its price was going down. I was getting mad. And I'm like, dude, what the hell? And then I put my alert down here. I was like, okay, if price takes this low, I'm going to get in even more. So I put even more leverage on right here. And this is crazy. I actually thought Bitcoin was going down. Isn't that crazy? Now I have 50% of the range right here. The reason it's crazy is because Ethereum already popped up. These are shadows right here. Ethereum already popped up and hit this level. Okay, at 2150. What is this? 2155. It hit this level up here. Okay, and Bitcoin was going down, so obviously it was only going down to go up because it has to catch up with Ethereum, Cardano, Atom, and Litecoin. Okay, but I still feel for the BS. This red arrow right here means that I got out. Okay, so I sold right here. with a loss actually, which was crazy. And then, I knew non-farm payroll was coming up. This is what this is right here, non-farm payroll. I have this is right at 1:30, so I already had this on my calendar. Which you guys need to go look at the economic calendar, and you need to mark up when news is coming out. So I actually fell for this. This was crazy. And then I could have held my position and had a lot more money in a position, but I should have known that it was going to catch up. But what I'm trying to tell you is this trading stuff, man, is really about psychology. I'm the one that created the shadow trading. I studied this stuff immensely, and I still thought Bitcoin was going down, even though it wicked off of 50% of the range right here. See this long wick right here? This is proof that we was going higher. No candle closed below 50% of the range. Okay, let me show you what range I'm talking about. Hold on. What range am I talking about? This is a key thing you need to write down or remember at least. Price will usually give you, the banks usually start buying at 50% of the range. Okay, ICT taught me this in his videos. So this is the 50% line. So I always mark up the ranges. When I see big pushes like this, I'm always going to mark up the range. What range am I talking about? Is it this one, or this is the range I'm talking about from this low right here? Okay, from this low here to this high up here. If you look directly in the middle, it's 50%. Okay, so always mark up the 50% range, and you'll see. I remember ICT used to talk about, I don't need the Fibonacci to trade. I remember thinking, like, what is he talking about? This is my beginning stages. I was like, the Fibonacci is the end all be all. But I understand where you're coming from. It's like, I still use it because I like to use it, but you actually don't need it when you understand the structure. In one of ICT's videos, he talked immensely about how price will come down to 50% in reverse because the banks stated they don't actually start buying. Well, they buy, but they really love when it comes down to 50%. And no candle, you see this long wick right there? This is rejection, but you have to see what area this is rejecting at. This is rejected exactly at 50% because we didn't have an order block. If you look at this, we didn't have an order block. So, because what I did was I was like, okay, I see prices going down as the rest of these are going up. So understanding the structure, I'm like, okay, well, where's it going down to? You see that? So I'm like, okay, it's going down. Obviously, it's going down to an order block or bullish breaker. So I looked at the structure, and guess what? I didn't see a bullish breaker. I didn't see a bullish order block. So I'm like, what the hell? So I'm like, okay, well, here's a bullish order block on the 4-hour chart. But to be honest with you, I was like, price is probably not going to come down here. So what I had to do is I had to mark up the imbalance. This right here is an imbalance. This is a 1-day imbalance on a daily chart. Let me see if I can show you without. I'm not going to go to the daily chart, but this is an imbalance. Now, another thing you have to do when you're marking up the imbalances, let me just show you because some of you guys probably don't even know what I'm talking about. Let me go to the daily chart. Let me show you what I'm talking about. Let me take off the annotations as well. This is an imbalance. So remember, all these pairs move similar. Cardano, Litecoin, Ethereum, they all move similar, right? So what I'm trying to tell you is that if they all move similar and Bitcoin is going down while the rest of them is going up, then you have to ask yourself, like, why is it going down? It's going down to go to a bullish order block or a bullish breaker. Okay, if not, if you don't see that, then it's going to fill in an imbalance. Okay, so here's the imbalance I was talking about right here. Okay, so what I said was, okay, well, why is price going down? I didn't see a bullish order block or a bullish breaker, so I said, okay, well, it has to be an imbalance. Okay, so here's the imbalance here. You see this from this wick right here all the way up to here? It was only buy side that was offered. It was a huge push right here. We don't see any bearish candles. It just was a huge push. So this is an imbalance. When you see this is a gap right here, this is an imbalance from this wick to this wick here. Okay, this is called an imbalance or inefficiency. So that's what I'm saying. Like, if you don't understand the structure, it's going to take you time to understand the structure, but still understanding the shadow trading, which is what I created for you, for new beginners, people that want to be on my team, which is a great choice, by the way, because I actually have something I can give you that you can make money at until you actually learn the structure. Other people, you just learning the shit for however long it takes and you're not making any money at all. I think people should be able to make money on their own by using the shadow trading while you learn how the structure works. So anyway, I was thinking to myself, like, okay, well, why is it going down? Knowing the structure, I'm like, okay, well, it's going down to fill in this imbalance. Now, listen to this. This is consequent encroachment of, you see the mean threshold of consequent encroachment. I like to use the exact terms that ICT uses. So I forget which one it is, but usually price will come down to 50% in reverse when it comes into these gaps. Sometimes it'll come like institutional order flow entry drill. It'll come down to about 25% and then reverse, or about 10-15% into this gap and then reverse. So this is another thing you can use to show you what price is actually doing. So since it wicked off of 50% and it couldn't close below, this is a sign that it wants to go higher. So I'm just trying to show you what I was looking for when I saw price going down. I wasn't getting scared. I'm like, okay, well, if Bitcoin is going down while the rest of them is going up, which don't make any sense. But if you understand the structure, you're like, okay, well, not just understanding the structure, but also understanding the shadow trading. You have to say, okay, well, why is it going down? And I'm like, okay, well, maybe it's coming down to filling this whole imbalance here. But if it don't fill in the whole imbalance, it's probably going to go down to 50%. Now check out this confluence right here. This is mean threshold of this imbalance right here. Okay, the green box right here is the imbalance. Let me make it real bold. Hold on. It's not going to be a long video. Let me make it this green here. Okay, so here's the imbalance, and here's the 50% line. Okay, which is, I think you call it mean threshold or consequent encroachment, one of them. So look at this confluence. This is 50% of the imbalance that I just showed you on a daily chart. Okay, here's the imbalance right here. I'm on a 5-minute chart. I love to ICT say you need to go down to a lower time frame, like the 5-minute, the 3-minute, or the 1-minute, and master that time frame. Because now I've been looking at the 5-minute chart for so long. I really can see like what's going on with the candles. But anyway, so this 50% of the range, which is this turquoise line, check this out. 50% of the range lines up exactly at 50% of the imbalance. And no candle closed below 50% of this range, or no candle closed below 50% of the imbalance. So this is game time that price is going higher. I actually know this, but it's a psychology game. Because why did I sell right here when I saw this right here? That's what I'm saying. Like sometimes you know stuff, and I may do like a psychology video about this, but sometimes you know how the structure works. But when you put real money on the line, your mind like goes somewhere else sometimes. That's why you got to be relaxed and stay calm. This was ridiculous for me to sell right here. When I saw what the structure was doing, it just was retracing back down. It still was maintaining the lows. Like, look at this, no low was being taken. You see? It came all the way down here, but this low wasn't even taken. See that? So I got back in on another buy right here. And then I took another buy right here. And I actually sold right here because let me tell you why I sold it. Then I'll end the video. Hold on. And make sure you subscribe and make sure you like the video as well. Leave a comment, but make sure you subscribe because some people watching the videos are not subscribed for some reason. Unless you got those family members or silent people, who just want to watch in the shadows, see what old boy Anthony doing these days. But or Diamond Life doing these days. But anyway, so what was I getting at? Oh, okay. So the reason I sold is because look at this right here. Yeah, the reason I sold is because price came up to this line right here. Now, if you look at it, I had confirmation for, let me delete this line right here. You have to sell up to where you have confirmation to when you're using shadow trading. So think about it. Litecoin hit this green line right here, right? And you see Atom, Cosmos hit this green line. Ethereum hit this green line, right? Did I already do a review on this? I don't think I did. But, so I had confirmation that price would come up to here, okay? See, I could have waited. See, this is what I'm trying to tell people. Like you have to just trade it up to one line at a time because look at the next line up was this line here. So some people would have been trying to wait for price to come all the way up here being greedy, but you have to take it one line at a time. Because think about it. Ethereum hit this turquoise line right here, right? ADA, which is Cardano, hit this turquoise line. Litecoin hit the turquoise line as well. And Atom or Cosmos hit the turquoise line. But you have to wait. You have to just take it one line at a time. So me understanding how shadow trading works, which is what I created, I'm like, I'm not about to wait for prices to come up here. I'm just going to take it one line at a time. What do I have confirmation for? See, this is what I was thinking at when price was down here. I'm like, okay, what do I have confirmation for? What I have confirmation for is the very next line. Okay. Now, if you look at the structure, Bitcoin even hit this line right here, this green line. I don't know if you really can see it while I'm recording it. Bitcoin even hit the line already. Okay. Bitcoin hit this green line on Tuesday, December 5th. And so Ethereum hit it, Atom hit it, Litecoin hit it. So what I'm trying to tell you is that when you're doing a shadow trading, you have to look to see what line is the very next line that you have confirmation for that the rest of them hit. Because think about it, if you could have held for this line here. Now I'm not saying price is not going to hit this line. I believe it will, but look at the structure now; it's going down. So you would have been in drawdown, trying to be greedy, trying to hold to this line versus just getting out at the very next line that you have confirmation for. This line, these lines right here are micro standard deviations, okay, of the first 5 trading days. Okay. So this is the actual 1 standard deviation of the first 5 trading days from this yellow line all the way down to this line here. And the white line, this is 25%, that's 50%, that's 75%, and that's 100% of 1 standard deviation. But I went a little further. I broke this 25% up into micro standard deviations. Okay. And that's what these lines are. So every time the other ones that move similar hit these lines, I recorded. I went down to the 5-minute chart and I said, okay, what time did Ethereum hit this green line? Okay, the Ethereum hit this green line at 1320. Then I went to Litecoin. I said, what time did Litecoin hit this line right here? You see? And then you plot it on there. These are shadows. This is a shadow trading. I created this shit. Okay, I created it for you so you can get paid something, even if it's just fucking $500 a month. That's better than nothing. You know, you need to get paid something while you're learning. That's the whole point. I want people to get paid something. You know, while they learn how the structure works. And to be honest with you, learning how the structure works is going to take time. So, you know, you should be getting paid something, even if it's a small amount, some kind of money until you actually learn how the structure works. That's just my belief. For people that trust me, you know, I'm going to make sure you get paid. Okay, what I just do? Okay, cool. So this is the win review of Bitcoin. So like I said, I got out because I only had confirmation. I had confirmation that price hit this turquoise line too, that you can probably barely see on a replay. But I'm not going to hold for the second line that price hit. I'm going to do it one line at a time. So I should have held on for a little bit more, but I literally got out right when price hit this line right here. Well, actually, I got out right there. Yeah, I should have held a little bit more, but so yeah, so that's why I got out. Thanks for watching.